Hi friends, let us discuss about the bank reconciliation statement in this part. There is always a difference between the bank account maintained in the business ledger and our account maintained by the banker. There is always some unmatched debits and unmatched credits between these accounts. Let us analyze how to prepare the bank reconciliation statement here.
Business firms maintain a cash book to record both bank transactions as well as cash transactions. The cash column in the cash book shows the available cash on hand, while the bank column in the cash book shows the cash available at the bank. However, due to large volume of business transactions, there is always some difference between the bank account maintained in the business ledger and the bank account maintained by the banker. When we issue a check to supplier, we credit the bank account instantly in the business ledger, but the banker debits our account with him only when the check is presented for payment and cleared. So this is an unmatched credit. There is no corresponding debit in the bank account. Always understand, when the money goes out from the company, we credit bank account. However, the banker debits our account when he pays money from our bank account. So it is the opposite entry there. When there is a credit in our bank account, there is a corresponding debit in the bank account maintained by the banker. So when there is one credit entry in one account and there is no corresponding entry in the other account, it is known as unmatched credit for our rule. When you proceed from cash book to find passbook balance, or when you proceed from the negative balance in the bank account, namely overdraft balance, to cash book balance, you always add unmatched credits and less unmatched debits. And while working on this solution, you always take the figure as a positive figure. We know that overdraft balance is a negative figure, but for the solution, you should take it as a positive figure, that is multiplied by -1. And the result also is multiplied by -1 to indicate the correct balance. When you proceed from the passbook to cash book, from the negative overdraft cash book balance to find bank book balance, you always add unmatched debits and less unmatched credits. Here also, when you proceed from overdraft cash book balance, the cash book balance overdraft should always be taken as a positive figure multiplied by -1 for the solution. And the resulting balance also should be multiplied by -1 to indicate the correct solution. Let us see the illustration here. Illustration 1. The hotel company issued 3 checks. Dinagaran Cheese for 14,000 and it was not presented for payment. Lovely Bakery, rupees 28,000, the check was lost in transit. And Mahalakshmi Provision Stores, rupees 52,000, the banker still not processed the check due to intervening bank holidays. In all these 3 cases, we have already credited the bank account, but there is no corresponding debit in the bank account. So this is known as an unmatched credit for the solution. Also, the hotel company receives checks from Delaware IT company for rupees 85,000, which has been entered in the cash book, but it was not deposited in the bank. Devaram Finance Company issued a check for rupees 65,000 and the banker has still not processed and given credit. Chit Fund Company issued a check of rupees 30,000, but it was returned for want of funds to the banker. In all these 3 cases, we have debited our account with 85,000, 65,000, 30,000 respectively, but there is no corresponding credit in the bank account. This is known as unmatched debits. Banker charged rupees 500 for dishonored check and it is a debit entry in the banker's account and there is no corresponding entry in the bank account maintained in the business ledger. This is known as unmatched debit. There is also a NEFT transfer from 3 parties A, B and C, rupees 8,000, 10,000 and 15,000 respectively, directly credited to our bank account. There is no corresponding debit in the bank account maintained in the business ledger. This is an unmatched credit. Bank paid office rent rupees 20,000. Bank charges was debited to the extent of rupees 2,000, and these two debits are found in the passbook, but there is no corresponding credit in the bank account maintained in the business ledger. So the rule 1 to apply here is when we proceed from cash book positive balance to find out the passbook balance, you always apply rule 1. Cash book to passbook is rule 1. Add unmatched credits less unmatched debits. But the bank balance in cash book is positive balance and it is taken directly as rupees 35,000. And all unmatched credits, namely Dinagaran Cheese, Lovely Bakery and Mahalakshmi Provision Stores have been added to the extent of 94,000. And the unmatched debits are deducted, namely Dilavar ID Company, Devaram Finance Company, Chit Fund Company, Dishonored Check. All these entries have not been passed by the banker. So these unmatched debits are deducted. Bank charges rupees 2,500, office rent paid by the bank 20,000. All these are unmatched debits. Debit entry is found in the bank account. There is no corresponding credit entry in the bank account in the business ledger. So unmatched debit is deducted. Also, NEFT credits directly into the bank account by 3 customers A, B and C are credits in the bank account and there is no corresponding debit in the bank account in business ledger. This is an unmatched credit. So this has been added. So the resulting balance is a negative balance in the bank statement of account to the extent of rupees 40,500, which is an overdraft bank balance. Illustration 2 is worked the reverse way to check the rule. Here, when we proceed from passbook overdraft balance to find cash book balance, you always take the figure 40,500 as a positive balance for the solution purposes. So 40,500 being a negative balance, we are multiplying this by -1 and to take it as a positive balance of 40,500. We are adding all unmatched credits, Dinagaran Cheese, Lovely Bakery, Mahalakshmi Provision Store to the extent of 94,000. We arrive at 1,34,500. And we all deduct unmatched debits, namely Dilaver IT Company, Devaram Finance Company, Chit Fund Company, Dishonored Check to the extent of 1,80,000. And there are also unmatched debits, bank charges 2,500, office rent 20,000. All these unmatched debits are also deducted. The net figure is -68,000. And there are 3 credits, NEFT credits directly into the bank account. This is an unmatched credit, 33,000, and the resulting balance becomes -35,000. But this is not the correct solution. We have to multiply the resulting balance by -1 as we also multiplied the opening balance by -1. So the result is a positive balance of 35,000. So this is a surplus balance in the bank account in business ledger. So the solution is verified. Illustration 3 similarly calls for rule 2 as we are proceeding from passbook to cash book. Balance as per passbook is surplus balance. 2 parties A and B directly credited bank account with 5,000, 6,000 which does not appear in the business ledger. This is an unmatched credit to the extent of 11,000 and therefore these unmatched credits are deducted. The rule here is less unmatched credits and add unmatched debits. Office rent paid by the bank, rupees 20,000, a debit entry found in the bank account, no corresponding credit entry in the bank account in business ledger, so this unmatched debit is added to the extent of rupees 20,000. Checks issued to parties XYZ for 3,000, 4,000, 5,000 respectively, which had not been cleared by the banker, is a credit entry in the bank account business ledger, no corresponding debit in the bank account, and these unmatched credits are deducted. The resulting balance is bank passbook balance, surplus balance to the extent of 57,000. We have given other illustrations which you can go through to understand the bank reconciliation statement better with these 2 rules. Thank you.